Everyone. I'm thrilled to have you here as we dive into one of the most important yet overlooked aspects of a successful legal career, financial health. You've all spent years building your legal expertise, establishing your practice, and advocating for your clients. But if we're honest, how often do we step back and look at our own financial strategies with the same level of diligence? As legal professionals, we face a unique set of challenges. The demands of a legal career can be unpredictable, and income can fluctuate dramatically. You might have record breaking months followed by quieter ones. Then there's the tax complexity, whether you're a partner, an independent attorney, or a firm owner. Tax obligations can feel like a moving target, constantly changing and difficult to optimize without proper planning. Another challenge is the pace of which attorneys are working. When you're busy serving clients, it's easy to deprioritize your long-term financial planning. Yet, this is precisely where missed opportunities and unnecessary risks creep in. I am your host today. I am Dolores Sheets from Dolores Sheets Accounting and Tax, and I help attorneys maximize their tax benefits and their practices. And that's why we're here today. When attorneys approach finances with the same strategic mindset that they bring into their legal work, they can unlock huge benefits. Financial planning isn't just about balancing a budget or preparing for tax season. It's about creating a resilient, growth-focused roadmap. Tailored financial planning considers not just where you are today, but where you want to be. For some, that's a comfortable retirement. For others, it's legacy building, firm growth, or financial freedom earlier in life. Here's where the power of knowledge comes in. By proactively managing investments, implementing smart tax strategies, and keeping your books clean and current, you're not just preserving wealth, you're generating it. For example, many attorneys don't realize the benefits that they can unlock through tax-efficient investment strategies, especially when they align their firm structure. You could be using tools like 401ks, IRAs, or even solo 401ks if you're an independent attorney, not only to build wealth, but also to reduce your taxable income. Today, we'll cover these topics in depth, thanks to our expert speakers who are here to share their insights on tax planning, investment strategies, and organizational best practices. This session is designed to leave you with a fresh perspective on managing your finances and specific strategies you can implement as soon as tomorrow. Before I turn it over to our speakers, I'd like to leave you with a thought. Financial mastery isn't a luxury, it's a strategic advantage. Think of the gains, both personal and professional, that come from knowing your financial house is in order, knowing your investments are working for you, and feeling secure about your future. Today is your chance to start on this path, and we're here to support you every step of the way. And our first speaker is Tyler S. Clark from Dream Firms, and here he is.
Thank you for the introduction, Dolores. Pleasure to be here, and pleasure to be here with the other speakers as well. And yeah, I just want to echo before I get into my talking points here and some of the slides I've prepared for today's presentation. Dolores is amazing. She's one of our top clients. I know the work that she puts into working with her clients. She's just an absolute amazing person to have in your corner. I can't speak more highly of her, and I know the other people on this call will echo my sentiments as well. So if you've got the opportunity to work with her, don't be a fool. There aren't many Doloreses in the world, and she knows her stuff. So what I want to talk about is making sure that your law firm can actually afford the Dolores Sheets services, because a lot of law firms don't have the level of profitability that they would like to have, so that they can really maximize tax saving strategies or leverage incredible financial strategies that she has available to her. And then to me, that starts on the front end. It starts with, how are you acquiring your clients? How are you selling your clients? What does this look like? And I'd like to actually start with a little bit of an anecdotal, I'm not a lawyer, so I don't have a great silver tongue, but an antidote for an experience I just had interacting with law firms. So I'm actually in the process of selecting new legal counsel. So I actually have a really unique perspective in terms of like what is out there in the market. How are you contacting and working with lawyers? What's their sales process look like or feel like? And without naming names, I'll give you two very stark examples. And then I'll go through how you can ultimately improve your overall lead flow and some of the KPIs that we help accounting firms pay attention to that I think also directly translate over into law firms. And before we go any further, if you're watching this and you're a law firm, I'm not going to work with you. I only work with accounting firms, no matter how much you like me. So just, there are other people out there who can help you. So we're looking specifically for a very specific type of service, okay? It's related largely to M&A work, okay? And so the reason I bring that up is as soon as you're trying to pursue legal counsel, you're almost always pursuing a very specific type of legal work. Now, if you talk to any accounting firm, they'll say, we can't solve every accounting problem in the world. And if you talk to smart lawyers, they also are going to say the same exact thing. So it's important that everyone knows the lane that they're in and that they're actively communicating to the market. This is the service that we do. This is the people that we help. Because if I'm trying to find M&A attorneys, I don't need real estate attorneys. I don't need personal injury lawyer attorneys. I'm looking for a very specific solution to a very specific problem. And the firms that are out there talking routinely about this are significantly more likely to actually garner my attention. Now, here's the crazy part. Okay, I'm gonna say something that's gonna blow your mind. I reached out to 50 law firms. 50. Do you know how many of them responded to me? 0. Now, I've got a great business too. I'm not going to toot my own horn, but I was almost flabbergasted by that. I couldn't believe it. So then I had I was like, I got to pass this to my executive assistant because this is just too much. I was like, you got to go find another 50. Of those 50, do you know how many responded again? 2. I got 2 responses out of 100. So my point is if you're actually trying to gain business right now and you're actively marketing and you're putting yourself out there, there are firms that are gaining inquiries and they're not even touching them, which is just crazy to say out loud. Now, I've got one more part of this that I think is really fascinating. To be fair, a lot of those firms responded and said, we're not taking any new clients, or they may have said, here's a referral. And even when I contacted referrals, I would only get like 1 response. And that's one of the 2, which is crazy. So anyway, here's my point. 2 very different sales processes and experiences. One from a very large law firm, one from a very small law firm, solo practitioner versus 100+ partner law firm. When I engage with the conversation with the large law firm, very polished. And if I were to summarize what made that so polished, has nothing to do with, first of all, they responded very quickly through email. It was a very snappy process. It felt great in comparison to like no responses and no interest. It just felt nice. Immediately got on a Zoom call within a couple of days with not a partner, but an associate. Really sharp guy. And what was really nice about it is he was willing to just learn about me. Like whenever you are engaged in a sales dialogue, it's always about the other person on the other end of the line, 1,000,000% of the time. Okay. And I'm going to juxtapose this against the conversation I had with the small, almost solopreneur law firm. Super nice guy, to be clear, but clearly suffers from what happens to most really great technicians, which lawyers, accountants, dentists, right? Like people who are very good at their craft transition over into entrepreneurship and they're like, oh my Lord, I need to learn how to market. I need to learn how to sell. And now they're sort of in this like maelstrom, if you will, and they're not sure exactly what to do. But just like there's a good process for discovery for law firms, just like there's a good process for understanding the problems in QuickBooks for accountants, there's a great process for both marketing and sales. And as long as you know what those things are and what to pay attention to, specifically KPIs, which I'll cover in a minute, you're going to do really well. And so the problem that I could succinctly say happens more commonly than people would like to admit is that the solopreneur law firms or accountants of the world, they talk about themselves. Like they're trying to justify why they're important. And they're giving you 20, 25 minutes about why you should trust them, their stories, their background, their years of experience. And they really don't even know that much about me and whether or not I would even be a good client. And simultaneously, it's creating distance between me and the likelihood I'm going to buy. even if the other large law firm is significantly more expensive and they both offer the same M&A specialty, I'm going to go with the one that gave me the better buying experience. That's very common. So my point is like taking the time to both define the category that you're working in, being responsive when inquiries are coming in, because everyone has the bottom 20, 30% of their client base that they'd like to trade out for more of the top or 20 or 30% of their client base. You should be open to those things. You should have structured processes for how you handle that. And ultimately, when you get into the sales dialogue, if I could just give you one simple trick that makes it really effective, just ask them questions. You don't need to say a lot. I promise. They are going to tell you everything that you need to know. And then that's going to tell you whether or not you should even attempt to make them an offer. One last point on these experiences. I walked away from the call with that larger law firm knowing that their rates were really high. Didn't bother me. I walked away from the call with the small law firm. I had no idea what his rates were. He didn't even tell me. We didn't schedule next steps. He didn't suggest that there was a retainer I had to pay for. I have no idea how to even buy, even if I wanted to. So again, I say that just because there's tremendous opportunity for everyone to make your business more profitable. Yes, from a financial strategy side, but also from look at how the front end of your business works. Look at how your sales process works. Make sure those things are buttoned up. And when they're really buttoned up, it makes the financial piece and the strategy piece even more powerful. Guess what? You're making more money. And now you can have more savings and you can do a lot more fun stuff with capital you do have. So those are the main points that I wanted to cover. And I'm going to go through some KPIs. I'm actually going to refer to these more as like marketing and fundamentals. And I'm going to go through the 5 pillars of the business that I look through in terms of like how I analyze, like, are these things in place? Because if they're not in place, it's almost impossible to do any form of meaningful tracking around your business. So we're going to review these fundamentals. And I'll also just tack on very quickly some additional points in terms of like KPIs that everyone's going to be interested in for each of the pillars. And I'm going to just send a quick request over to Dolores so that I can share my screen here. Awesome. Thank you very much, Ms. Dolores. Okay, so let's go ahead and jump on in over here. And away we go. All right. So marketing fundamentals, okay? Do we clearly have a dream client profile and clearly state who we want to work with? If you visit most law firms' websites, you don't have any idea about either of these. And if you look at their socials, same thing is true. Do we look the way the client wants us to look across all mediums? Now, this is usually easy for lawyers. You're always in suit and ties. You guys look super sharp all the time. So I think you got this covered in spades. Do we make clear offers that speak to pain points and dream outcomes? Now, this is a little tough for law firms because they tend to have, they get caught up in legalese. They have regulations that they have to adhere to. But even still, there's language you can use that's more effective than other pieces of language. So just make sure that when you're making an offer, like the story I told earlier, they know how to buy. They just need to know how to buy. Like, is it a retainer? Is it I pay at the end of the month after I use some hours? Is there different rates for associates versus partners versus the paralegals, right? Like, just give me an understanding of how this works, please. Do we regularly communicate in the spaces they are the most active? In other words, are we showing up where they show up? So if I'm looking to work B2B opportunities, which is generally speaking most law firms, barring injury law, guess what? I'm probably hanging out on LinkedIn a lot. I'm probably spending a decent amount on Twitter because there's a lot of good thought leaders that are using those 2 platforms for business relationships. And then do we educate them for free without expectation that they owe us anything? And so I think this is another thing that's kind of surprising is I think similar to financial planners, lawyers are almost afraid to speak publicly because they think that there's some liability that someone will take what they say and take it to the nth extreme. And now all of a sudden their battleship is sunk. So I look at these marketing fundamentals and just go, you got to do these. And as soon as you're doing them, you're really tracking how many leads did we generate per week? What's the quality of the leads that we generated? How many of the leads, which is just a way of email opt-ins, right? Like how many people became aware and interacted with our brand in it? They exchanged information with us. How many of them advance to booking a call? So booking the call is the end of the marketing sort of like KPI category. And I'm looking at number of book calls and how many leads converted into book calls. Those are the two most important ones. And you're just trying to drive both of those numbers up. Okay. Sales fundamentals. Okay. So sales fundamental is, did you discover the pain, right? Like pain, you only find the pain if you ask questions. Goes back to the anecdotal story I provided earlier. And the pain is the pitch. If you know the pain, that's basically all you have to talk about and say, we're going to help you through that. Did you summarize what they said clearly, concisely during two different parts of the call? So what I'm hearing is you're struggling with getting really good legal help for your M&A acquisition. You're not really getting the support you need from your existing law team. And it feels like you're paying for a lot, but getting a little. Is that right? Okay, cool. And you want to do that at least twice. Did you use a price anchor so they can view your price as a good deal? It's like, do you know how much it costs to have an in-house legal team? Like, have you thought about, like, are you ever going to go down that path compared to out-of-house counsel? Again, my language isn't perfect for law firms, so please excuse me. Did you focus on the benefits that apply directly to their pain? Okay, so in other words, not everything is important related to the problem that are being presented to you. So you may want to wrap in another aspect of services that you may do. You may not need to talk about it at all. For instance, for the very large law firm, he was like, hey, what else are you struggling with? I was like, man, I got this real estate thing, small town politics. He's like, oh, cool. Where are you? I'm like, oh, I'm located outside of the States. He's like, oh, we got lawyers in that country too. And we got real estate experts. I was like, oh, that's fantastic. And so he managed to pull out another pain and apply another benefit to it. Now, again, that comes from large scale. If I'm on the smaller side, I'd pull out more pain related to the M&A and focus on that. Did you ask for their business? And if unsecured, did you schedule a follow-up call? This was missed basically by both of them. The larger law firm had to go through this bureaucratic process, got to get you a pitch deck. The pitch deck told me nothing. And then I just had to have a meeting with a partner anyway. So like we could have just skipped the pitch deck, just scheduled a meeting with the partner and like, let's get this train rolling. And the other guy, like I said, I didn't even know what his quote was. So when I look at sales fundamentals, it's show rate. I look at that as a sales fundamental as opposed, a sales KPI. So how many people are showing up for their book calls? What is the close rate? So, I want to see at least 25, 30% of all qualified leads ultimately engaging in services. That's generally what I like to set as a minimum threshold. And those are the two big ones. Like, again, I've got 50 that I track. Like Dolores and Jeanette saw it the other day. Like I got a huge list of sales KPIs. But for fundamentals, like if you can't immediately tell me what that is or find the answer to that within like 5 minutes of effort, you're not paying attention to it at all. And I would just say start there. Okay. Fulfillment fundamentals, we're going to go through this pretty quick. Is the endpoint of onboarding clearly defined? I imagine lawyers have a similar problem to accountants in the sense that you sign a new client, but in terms of like getting everything you need to help the client, it's probably not as streamlined as you'd like it to be. And that's just like, you don't pass them to the next part of the process until we actually have completed this. Next is like, you've got to make sure the baton of trust is passed safely from sales to fulfillment. This assumes that you've got dedicated people in each category. But even if you're the owner and you do the sales and then a paralegal is doing onboarding, you got to be like, hey, Timmy, he's amazing. He's going to crush it for you. You just got to follow his instructions and we're going to be able to take care of this really quick. Is the client aware of their responsibilities and the time frame in which they are to occur? Again, most buyers, it's always done with you. There's no, like a law firm is helping you with you. They can't help you independent of you. Just like an accounting firm or even a marketing firm, they can't help independent of you. But they don't explain what the responsibilities are. So I always want to make sure that the onboarding process is extremely scripted so that everyone knows what their responsibilities are and when they're supposed to do them. Support options, right? Like, can you call? Can you email? Can you text? Is it by appointment only? Is it through Zoom? Are they even aware of these things? And then can the client provide feedback in a structured manner that leads to future product improvements? Again, like the best, like the goal that lies within most businesses is from the existing client base that you're not listening to. So when I think about fulfillment fundamentals, well, the number one thing that tells me whether fulfillment's good or not is churn. How many clients did you lose? And I know the difference between legal and accounting is legal is usually concerned, it's not concerned, it's they don't have reoccurring business, they have recurring business in the sense that it's not predictable that every single month we're going to do your bookkeeping, but it is reoccurring in the sense that you keep going back to your lawyer for different respective things as time goes on. But I would want to look at that if it's reoccurring versus recurring or one way or the other. I would say how many clients are coming back? What's the frequency with which they're coming back? And can we shorten that? In other words, are we communicating with existing clients consistently to stay in front of them to know that we are here to help them? Because I would much rather keep a client than need to go and get another client to replace the client that left because they didn't feel like they got the love from us. So my biggest fulfillment metric is just churn. I'm just paying attention to churn and how much and how often and frequently clients are contacting and communicating us, because that is a direct health metric for how much they want to actually keep working and paying, working with you and paying you. Operations fundamentals. So operations is just the fancy word to say the glue of business. Okay. So are there regular recurring meetings with key team members that are short and agenda driven? I think meetings are generally the bane of existence of as the organization grows larger. They're just like big bureaucratic, meaningless, like nothingness crap shoots. You don't want that, but you also don't want no meetings. There is a happy middle ground here, I promise. And are there strict hiring protocols in place? Okay, so again, these are just fundamentals. I know law firms are really good at those, so I'm going to skip that. Are there structured onboarding and policies to incorporate new team members quickly and effectively? So I think similar to accounting firms, there's a lot of training that has to happen to bring younger lawyers up to speed quickly. The more documented and structured that is, that requires less of the more senior members' time, the faster the company will grow. So again, just a fundamental. It's like it's so worth the time to create that or buy access to the things that are pre-made that you can plug people into, because you can never get your time back. Are there accelerated training time blocks to bring a new hire up to speed very quickly? So when you're growing an organization, the biggest issue is usually your team. Your time to bring a new team member up to speed is like you meet with them once a week or twice a week over 10 weeks. And I go, you should just be meeting with them twice a day for 10 days. Like you should just be like every single day you're meeting with them, and it's very structured, and you're keeping them on a singular topic until they've mastered it. And then you're bringing them to the next topic. And this is a big one. Are there deeply adopted communication policies for how we communicate to clients and how we communicate between the team, which are not the same thing? So does the team know how to communicate with each other? And does the team know how to communicate with clients? Those are separate communication policies, and we want to make sure that those are well established. In terms of KPIs for this one, I'm really big on just like you have hiring goals. Like you want to fill seats and you want to focus on time to hire. So from the time you say, we're going to hire to when the seat is filled is one of the best metrics to look at. And then you also want to pay very close attention to your churn for your team. How long is the average team member sticking around? Because if you're putting a lot of effort into filling the seats, but people are leaving in 6 months or 12 months or 18 months, that speaks to a very, very bad issue with management, pay, motivation. And so I really want to pay close attention to those two things as a fundamental. Of course, there's a million things you can track, but those are generally speaking the ones that are going to move the business forward the fastest, because they'll force you to, why is this happening? Finance fundamentals. Now, of course, Dolores is probably going to have a lot on this topic, so I'm going to keep this pretty light here, and I don't want to steal any of her thunder, but again, like part of this is just like, what's the financial strategy for the business? And some people do 180 days OPEX. I prefer 90 days of OPEX. I think it just forces the business to be hungrier and fight more to generate more cash over the next 90 days. But I want to have at least 90 days of OPEX in cash on hand at any given time. Are the books accurate and reviewed periodically? I mean, I know Dolores will speak to this, but the amount of money that is lost for accounting firms and law firms because they're not actually getting paid for the work that they did. In other words, they've got these large outstanding AR bills. is crazy. Like and the minimum tens of thousands of dollars. I've seen it as high as hundreds of thousands of dollars. And, it's tough to collect that stuff, but act consistently looking at these things forces you to do things about them. This is, again, this one is another one that Dolores will help with. I'm not going to say what the strategy is, but like, what is the strategy for the cash we generate beyond the 90-day OPEX threshold, right? You've got to do something with it. It has to go somewhere. It can go into going to go get the next 10 clients. It could go into marketing spend. It could go into potentially funding 401ks. It could potentially go into opening up healthcare. It could potentially go into a tax saving strategy. It could potentially go into real estate. I mean, there's a lot of opportunities out there, but you got to pick one that aligns with what you want to do. I mean, of course, right? Tax man gets payeth. Are all taxes collected, paid prior to receiving penalties? I mean, there's nothing that sucks the energy out of a smaller law firm than just like, why? It's hard enough to get the money as it is, and I got to give more to the government than what I'm legally required to. It's just such a silly thing to even need to worry about, right? Like, we should never even need to allocate thought to this. And this one, I think, is, again, like the secret sauce of the value of accounting firms that most people just are too cheap to realize the benefit of. I'll just say it, like, they're not actually spending to get the level of attention that helps the business become significantly more profitable over the long term. Okay. And what I mean by this is, like, if you don't know your margins, if you're not looking at your pricing strategies and your cost effectiveness of capital deployed, how can you actually make a meaningful difference in the long-term health of the finances of the business? You literally can't. So in terms of, finance fundamentals, I really have just two, again, that I really like. Call me crazy. Profit. I love profit margin, gross profit margin, net profit. I'm always looking at that as the key metric for the business. And, the second one that I like to pay close attention to is, honestly, everything related to pricing, because pricing is the biggest lever that you can pull. So I like to just be like, how many times did we review our pricing strategy this year? And if it's once, I like to be like, we should probably do it twice, or at least once a quarter. That tends to be the sweet spot before it becomes a little redundant. But yeah, so I mean, those are the main bits that I wanted to cover with you guys. I hope you enjoyed it. I've got another call I have to run to, but I just want to say thank you to Dolores, Caleb, and Jeanette, my fellow speakers here, and of course Dolores for putting on the event. If you enjoyed this, check out, leave comments down below on the video when it gets published. Go work with Dolores. She's a rock star. She's one of the best people I've literally ever met in my life. She's just a gem, and you're in good hands for the rest of today's presentations, guys.
Thank you so much, Tyler. That was fantastic.
My pleasure. Have a wonderful day, guys. Talk to you later.
Bye. Okay, so our next speaker is going to be Jeanette Delgado from JD Management Advisory, LLC. And take it away, Jeanette.
Thank you, Dolores. Sorry, I was muted. Thank you for the invitation today, and thank you to all the people that are joining us today, Tyler and Caleb and Dolores, obviously. As she said, my name is Jeanette Delgado. I'm from JD Management Advisory. I've been providing bookkeeping services for over 30 years in various industries, but my focus currently under JD Management is providing holistic bookkeeping services to private medical practices. So rather than talking about me, I'm really going to focus on what I need to provide you for informational purposes. So I'm going to share my screen. Okay, so Dolores has asked me today to speak to you about preparing for year end. And so I think there may be some misconceptions or ideas of what this really is. And so I wanted to go through quickly because I could talk about this stuff ad nauseum because it's what we do, and Dolores will attest to this. We have lived it and breathed it for so long that it's just, we could talk forever on it, but I'm not going to do that. I'm going to really focus on what you should be looking for or looking at in preparation. So is your business ready for year end? And I'm not sure that everybody understands what that means. When does this preparation start for businesses? It starts the first day of your fiscal year. So it starts day one. You know, business and personal year-end planning is critical for maximizing or minimizing tax liabilities, but also correcting in real time any issues that you need to address, and also reducing your personal stress of running a business. As business owners, we know we have stress, so why not use that stress to be a proactive changer in how you approach your business, and maybe implement some of the tactics that Tyler talked about, or some of the solutions that maybe Caleb is going to talk about. But it allows you to really use the stress of knowing information about your business to react to it. But it all begins with fundamentals, and it begins with the foundation of organization. So my first step in any of this is document management. You need to organize your financial documents. This means to sort and categorize all your financial documentation, including receipts, invoices, statements, contracts. There's a myriad of documentation that goes through a business that helps you create this foundation. I consider document management key to this process of year-end preparation. Why? My husband's in construction, so I'm going to use a little bit of that language, but I consider document management the footers that you need to put into place to create a foundation. Why? You can't just build a house or a building on dirt. You have to put in footers so that it supports that building and provides that initial support for that foundation. So document management is so important and critical for that not only having the documentation organized, but storing it in a digital format or a secure physical location. And there are a million other presentations out there that talk about how to do this storage, how long to do it, but it's really important. I want to give you an illustration of this, and I'm going to speak more about this than anything else, because this is probably for me the biggest problem that I come across when I'm starting an engagement with a client. So my very first job as a bookkeeper, back when the dinosaurs roamed the earth, I'm not going to tell you when that was, I was put into a room. It was a conference room, and it was literally full of boxes, paper bags, plastic bags, containers. It was absolutely covered. There was barely any room to walk. And they told me, organize these documents. Why? This person had not paid taxes for 7 years, and the IRS was threatening to put him in jail. So we had to produce documentation for 7 years and go and present it to the IRS to see if we could mitigate some of this problem this individual had. Literally, I had to go through every single piece of paper, organize it by year, enter it into the accounting system, and go through some of the process that we're going to talk about. The longest story of this was that this gentleman ended up not going to jail. It took 2.5 years for us to put this documentation together, but in the end, he just had to pay penalties and interest. So that was a good result for this person. But it was only because we were able to organize, document, produce the information that was required to present to the IRS and say, this is what it really looked like. And they had a basis to begin with. So how do you prepare as a business? Once we've had this documentation put together, organized, we're going to enter it into our accounting system. And then we're going to produce a reconciliation process. Reconciliation process means what? Well, I ask this question every time that I go and start an engagement. Have you reconciled your bank statements, your credit card statements? Oh, yeah, absolutely. We do that every month. Okay, I go into their system and I realize that they have never formally done a reconciliation. So what they've actually done and what their definition of reconciliation is to go in, make sure that what's in the bank shows up in the accounting system, and that's reconciliation. That's not reconciliation. That's a small portion of the reconciliation. As I'm training individuals in my firm, I always say it's more important to see what hasn't hit the bank than what did, because there are always problems associated. Was there a double entry? Are we missing something that, for example, income that maybe didn't hit the bank, and why didn't it hit the bank? Is there a problem with the transactions and how the process is for doing your deposits? Is there theft in your business? There's a myriad of reasons why something may not have hit the bank. So if you're only going by what the bank says, you're missing a whole other portion of what might be a problem and what might be a more serious problem. So I always say we base our entries on the documentation we produce, we've organized, we've codified, rather than what the bank says we have, because that's a very small part of the big picture. So what we're looking at for reconciliation are bank accounts, credit cards, loan accounts, accounts receivable, and within the scope of the clients that Dolores works with, most of you probably use Clio or some other software like that, where you have a very detailed tracking of your accounts receivable, but you've got to make sure you're reconciling that to your IOLTA accounts, because if those two do not match, there's a problem. And if the government comes back and says, or a client for that matter comes back and says, you haven't really worked my account correctly, you've overcharged me, or whatever it might be, you need to be able to say no, because we reconcile your account every month and we know that it to the penny, it's in that IOLTA account, we have not overtransferred, or whatever the argument might be. You need to be able to have a clear picture of what that looks like and make sure that you can prove that their money is in your IOLTA account and not moved over in error. And this happens, I have some attorney clients, and this happens all the time, where they move the money, they excess move money, and then we'll have to go back and say, okay, where was that excess transferred from? And then we've got to move the money back to make sure that it matches the accounts receivable account for each of the clients. And similarly, medical practices have things like this through their billing systems. Construction companies have it through other systems like Textura. Whatever it may look like for your industry, I know that we're probably talking to mostly attorneys today. Just make sure that you are literally reconciling each of your AR accounts to your accounting system. And I'm sure Dolores is doing that, so I'm sure you don't have a problem if you use her. But I know that this has been a problem in the past for other clients. Similarly, with your accounts payable, you want to make sure that any outstanding liabilities are being tracked properly. So that's what I mean by reconciliation. It's just not enough to know what's in the bank, but you need to know what is not in the bank. The other things that I want to talk about, and I clicked on too many of them right now, but also your employee forms. You are going to need to provide to your tax preparer or your CPA, or even in some cases for Caleb, if he's setting up some of your accounts, you're going to need to provide some payroll information. So the other thing that it's really important to do from day one is you have to have updated W-2. So you have to meet with your employees on a yearly basis, and maybe more often, to make sure that they are deferring the proper amount of money, that maybe they don't need any changes. Did they have a new child? Did they get married? Did they get divorced? Do they have any garnishments? Are you paying correctly towards the retirement deferrals, the health insurance deferrals, your AFLAC deferrals? So you need to reconcile those accounts as well to your payroll. Make sure, I can't tell you how many times I have a client that I was working with, when I reconciled their retirement accounts and their health accounts, they had overpaid on some of their retirement employees and they had underpaid on others. because they weren't looking at that in a regular basis. If you have any changes in your deferrals by your employees, you've got to make sure you adjust those deferrals within their payroll. And that comes along with reconciling and making sure that you're tracking that. And your W-2s will allow you to document those changes. And again, it goes back to document management. You've got to make sure those reports, those W-2s, the W-9s are in place, so that when you do your year-end tax preparation, it all matches. And again, if you have a good bookkeeper like Dolores or myself, we're looking at that every single month. So if there's any discrepancies, we can make adjustments. We can course correct in real time to make sure that those things are fixed in real time, so that you don't get into trouble after the fact. So with regards to your vendors, there have been a lot of things going on as it relates to W-9 forms. So historically, with people that I have talked to in the past, when we were dealing with W-9s, they'd say, oh, I wasn't able to get one from a vendor, so we're just not going to report on that vendor today, this time. Well, guess what? The IRS now is saying, oh, no, you can't do that. Not that they said that it was okay before, but they're really starting to focus on accurate informational reporting, informational form reporting. 1099s, and it is an informational report. So is the W-2s and W-3s. These are forms that have to be presented to the IRS at the end of the year to let them know sort of what's been happening with your vendors. So what's important to know for you in preparation for year end is that every time you engage with a vendor and you pay them over $600, you must have a W-9. So clearly part of your process for year end is to, throughout the year, as you engage with a new vendor or the beginning of the year, always get an updated W-9 from that vendor. Why? Because if you don't report the information correctly, two things can happen. First, you can be penalized for not reporting the information correctly. And some of you may have already received these little notices that say, this vendor information is incorrect. Make sure that you get this corrected and resubmit. If you do not get a W-9 from a vendor and you pay them over $600, technically you're supposed to be withholding 24% of the money that you owe that vendor and submitting that to the IRS as part of their estimated taxes, not your estimated taxes, but the vendor's estimated taxes. And if you're not doing that and you get audited by the IRS because you have information that is not correct, you will not only have to pay the back taxes, the interest and penalties on that, the penalties have increased. So just be aware that for a small business that is doing something incorrectly related to the W-9s, you can be penalized up to over $1 million. So that could be significant. Now, this can be mitigated depending on whether you intentionally did it or not. But the point is, just because you don't know the information doesn't exclude you or remove you from the liability of that. So I'm really stressing on this because it is something that the IRS is cracking down on. And I want to make you aware because we're now mid-November and we still have to get this done. So you better start cracking on all these vendors and making sure. And regardless of whether they tell you that they're incorporated, so therefore they don't get a 1099, you must still have that W-9 to prove that they are incorporated. So just an FYI, because you might get some kickback based on that. And you also want to make sure you have contracts that you have with these vendors to make sure that if they're promising you certain costs and things like that, you have that documentation, because that's also going to affect how your accounts payable and receivable looks like in your books. So the other thing we want to talk about are your clients and your customers. So you want to make sure that you have documentation related to your deposits. Deposit slips are key. You want to make sure that you have maybe separation of duties when it comes to your revenue somebody's collecting, the other one is reviewing, the other one maybe doing the deposits. Everybody has a responsibility. One of the great things about having somebody like Dolores or myself as bookkeepers is we're overseeing a lot of this. So we're kind of reviewing and saying, hey, did this really happen? Is it hitting the bank? How much hit the bank? I can't tell you how many times I've dealt with theft. I had a huge case where I had to address in the end, a $500,000 theft from an employee where they were pulling money from payroll to siphon for themselves. That person was prosecuted based mostly on the fact that the documentation, I was able to prove this information based on the documentation that we were able to collect. So again, back to that document management. Also, you want to run reports from whatever system you're using for your receivables. So if you're using Clio, run reports and save them digitally, because if you have a problem with your system and there's a glitch, at least you have some historical data to go back to, so that if something does happen, you can retrace what happened and maybe get it corrected fairly quickly. You might want to do backups of those systems. If they're all cloud-based, most likely the companies have backups there, but just for your own security, run some of those reports. If you're, again, we're talking to attorneys, but if you're do sales, you might want to have reports. You definitely have to have your POS system reports, because you're going to have to reconcile that to your accounting system. But save those reports digitally for a period of time, and then dispose of them once you have to have that done. Again, back to the payroll, make sure you run your payroll summaries, your quarterly reports. Quarterly reports, you may not understand what that means. So when you're running payroll, you have to submit on a quarterly basis what's called basically a reconciliation report to the government, saying this is how much our wages were, how much we withheld, how much we submitted to you. And then if there's a discrepancy, we have to submit the difference, and we have this reconciliation report that it produces. These reports have to be compiled and produced and given to your CPA and your tax preparer at the end of the year, so that they can confirm that the information that's in your accounting system actually matches what was submitted to the IRS and to your state agencies. You also want to keep your bank statements, credit card statements, loan statements, and more importantly, at the end of the year, these organizations are going to send you some information, a 1099. There are a myriad of 1099s, but one of which is the interest 1099. And a lot of your loan companies will send you a separate piece of paper as a 1099. But most times now, what they're doing, your banks and your loan companies are sending you on the first statement after year closing. That statement's going to have that information. So make sure that you are getting those statements and getting that information. Again, you got to present that to your CPA, your tax preparer, so they can verify what's been posted in your accounting system actually matches, and it's good to go. So these are all the documents that, even though you don't realize, you have to be giving to your tax preparer, because if they haven't asked for them, they're going to ask for them. The other information you need to make sure you have is related to your assets. One of the biggest pieces of disconnect that I find when I start an account is reviewing the assets that a company has. So this is called like an assets list or an equipment list, or everybody calls it some slightly different. I call it an assets list. What that tells you is it's literally a document that's produced by your CPA, your tax preparer, that gives a listing of every piece of asset that you have. And it doesn't matter how big or small. It has every piece of asset, furniture, fixtures, computers, printers, vehicles, equipment that you might use within your business. It gives a listing, the date it was purchased, the amount that it was purchased, and all this ties in to your financial statements. Again, they're going to match that up to your financial statements, which then they will use to produce tax returns. A lot of states you have to pay property taxes. Property taxes, most people think is for individuals. No, companies have property taxes. Where do they get that information from? From these assets. The assets list that's in your financial statements should match what your asset list is on the side based on a schedule then we use to post what's called depreciation, the value that is being reduced for that asset on a monthly, yearly basis. And each asset has a different depreciation time. So it's very important that these assets match your financial statements again. And then those financial statements are used to produce these property tax returns. And in the end, your regular return, business return. You also want to look at do a complete insurance review. This is kind of an asset because this really make sure that you are protecting those assets that are on this list so that if you have any loss, you are covered by insurance if it's insurance covered loss. So it's really important that you are covered completely and not partially. And I'm not sure if Caleb is involved in this, but typically you want to make sure not only that it covers your building, your assets, but also covers any losses for work that you're doing. So that's where your malpractice insurance comes in and so forth and so on. So those documents need to be ready and handy for your CPA, especially if you're going to be do forecasting or budgeting or trying to assess whether you're covered completely for what you need. Also, you want to make sure that if you're doing improvements to your property, so if you lease a space, but you do improvements that you cannot take with you if you leave, you want to make sure that you document those because again, those go on a separate schedule. Those are not considered expenses until they're depreciated. So those are considered capital items, and you want to make sure that you're documenting that properly, and that document has to be presented that information has to be presented for tax preparation, and again, making sure that it all ties in to your tax return. This is a biggie as well. If you are an attorney, and I know that Dolores also works with a lot of attorneys that then become property managers and start their own real estate companies and such, this is important. If you have multiple companies and you're moving money between all those companies, this is an intercompany transaction, and you want to make sure that you're documenting that very clearly. Typically, there is a process for this. Your bookkeeper should know, but they won't know unless you tell them or document it properly. And I can't tell you how many times people will have a transaction that moves from one company to the other. They don't have good bookkeeping procedures for tracking that. And then what happens is it's considered income. It's considered a distribution or a draw rather than just a movement of money. And that's also important because if you get it audited, you want to make sure that the IRS doesn't think that you're laundering money. So you'll hear a lot of times where you hear companies saying, oh, well, they were laundering money. Part of laundering money is like moving it from one company to the other all the way around and kind of trying to hide how that movement happened. So you want to make sure that you're really tracking that piece as an intercompany transaction rather than a distribution or a draw, and in the end, probably a tax liability to you. So again, very important for tax preparation. If it doesn't again apply to service industries, but if you are a business that carries inventory, you also want to make sure that you schedule on a regular basis at the end of the year an inventory count. And I'm not going to get into the details of what happens with that, but make sure you're consistent of when you do it, and make sure you have a process in place and explain that to your employees very clearly so everybody understands their responsibility and duties and how to report it back to you. Um, another piece, and it didn't seem, maybe it went through quickly, but for owners, business owners, you want to make sure you also are tracking non-wage items that will be included in your W-2. So depending on if you're an S corporation, you with where the shareholders is owning more than 2%, you have to report like their health insurance premiums on their W-2. You also want to look at the retirement contribution, the personal use of company vehicles, the group term life insurance, dependent care assistance, education assistance that you might have been using, and other non-cash benefits for meals, lodging, perks, things like that. So just be aware that there are things that you're going to need to probably report on your W-2 as an S Corp owner, and make sure that you're tracking that properly so that before the end of the year comes, that gets added onto the W-2. I'm going to go quickly to personal preparation for year end, because working with a lot of CPAs and accountants and tax preparers and EIs, they get from me all of the business information, all the documentation that we've just spoken about, but they struggle getting the client to provide them with their personal information. And so I wanted to kind of just quickly go through a few things, and because I'm sure Caleb can really elaborate on this because he's probably doing more of this work than you realize. But you want to review your investment portfolio. You want to see what you've been doing, how that affects your tax liability, how that affects your future planning. But as we were talking about year-end preparation, that's something you should talk to your investment manager, financial manager on a regular basis, or at least at the very minimum once a year. That is key, because if you are going to have tax implications in one direction, they may be able to help you with not only your business, but also your personal strategy. So important. You also want to maximize your retirement contributions based on whatever planning you're doing. You want to review what you have in terms of your health savings accounts to make sure you've maximized that. See if there are any changes that are required. You want to be able to produce and prepare and provide documentation supporting all your charitable contributions, some of which may be tax deductible, some of which may not be. So you've got to understand and have that documentation so that you can properly report that in your tax return. You want to review your capital gains and losses. Again, Caleb can help with that. But important information to have is save those statements, because there might be some adjustments that you need to make in your bookkeeping that will be affected by that. Track your personal expense accounts and save the documents. The biggie is making sure that any mortgage statements that you have are collected, property tax statements, medical expenses. If you have, some additional income that maybe you're an attorney that does a lot of presentations and gets paid for them, or talks at conferences and you get income from that, and it's not running through your business, and it's just on your personal side, you want to make sure that you have those. You want to review your beneficiaries and estate planning beneficiaries, people who are on your estate, that you want to make sure that the designations are correct, that your wills are up to date, your estate planning documents are up to date. You never know what can happen. I unfortunately just experienced one of my clients that I've had for many years, sweet man, passed away. And unfortunately, I'm trying to help his wife because she did not have access to any of this information. She had no clue what was going on. They had not planned. They had not set anything in place. And unfortunately, she may be in a really bad place because there was nothing in terms of an estate planning. There was nothing, no backup plans, nothing. She knew nothing about the business. I'm trying to help her through this whole estate thing as much as I can. But, just make sure that you're doing these things. Make sure that you're making your estimated tax payments. Make sure that your tax liability is being met. Otherwise, like Tyler mentioned, you could have a lot of additional costs associated. And do a budget and your financial goals. It's not enough to do that for your business, but you also have to do it personally. Again, do an insurance review, not just for your business, do it for your personal. You have a house, you have probably dependents and things like that. Just make sure that everybody's covered and that all of your assets are covered. Are you using your FSA, your HSAs, and making sure that if you have to use up the money that you are appropriately? And then make sure that your K1s, your W2s, if you had any gambling income, all of those documents have to be put together to produce the information that your tax preparer will need for year-end tax preparation. So business side, personal side, but in the end, the final step to all this is engage with qualified financial advisors, okay? Engaging with qualified financial advisors across bookkeeping, tax planning, estate planning, investment can offer significant benefits. Each of these areas play a vital role in your supporting both your business and personal financial success. Advisors should work collaboratively to maximize these benefits and prevent unnecessary overlap. I know of a case where I had a CPA that was working with a financial advisor, and they were in July talking about setting up, some retirement funds to mitigate some of the tax implications that they knew they were coming down the pike. And they missed the deadline to set up the account. The documents were signed, but the actual follow-through was missed. Guess what? They can't use that for this year. That's a big problem. Why? Because they weren't communicating. The advisor wasn't communicating with the CPA, and the client wasn't communicating with the advisors and letting all the individuals involved really understand where they were with the process. Should not happen. I'm sure it has not happened with Caleb, but it does happen. So just make sure that your bookkeepers are communicating with you on a regular basis, that they're collaborating with your CPA or tax preparer or financial planner or your attorneys, your insurance brokers. This is a team that should be working for you, not working for themselves individually, because in the end, it's to benefit you. And you need to be able to kind of change gears midway if you need to, but you won't know that if you don't know what is involved and what the implications are at the end. Also, schedule a meeting with your advisors at the end of the third quarter to review your current financial position. You should do it more often if you really are going to anticipate a lot of changes, or if you see changes happening that you weren't necessarily anticipating, then maybe you should meet with these advisors a little bit sooner or more often. But at the very minimum, once you close your third quarter, set up a time to meet with all of your advisors. Why? Because if you have to set up a plan, you've got to make sure that you don't miss a deadline. If you have to come up with money to pay tax liabilities, you can do that in a timely fashion, and it's not going to hit you all at once. You can maybe invest in something, maybe buy some equipment. What is it that you can do will only be able to happen if you plan for it, and you can't do it after the fact, right? So you want to make sure that you are being proactive rather than reactive. And that way you can reassess potential you can reassess, you can adjust, you can ensure deadlines are met, and you can mitigate that tax implication, both personally and in your business. So with that, that's the end of my presentation. It was a lengthy one, but I think people need to understand the involvement and why it's important to have people like Dolores and myself helping you along the way through the years, so that you can do these plannings, you can do adjustments, and you can make sure that it becomes the best business and personal response to year end that you can possibly make. So thank you so much for your time.
Thank you so much, Jeanette. That was great information. And I don't want my audience to feel overwhelmed by end of the year bookkeeping and taxes, because that's what we're here for you for, so that we can make it seem very seamless and almost enjoyable. And next up, we have Caleb Moore with Mathis Financial Partners. And I look forward to this presentation, and take it away, Caleb.
Thank you very much, Dolores. Well, first of all, welcome. And just for your personal knowledge, Dolores and I are both experiencing a biblical level blizzard. We're expecting 40 inches of snow here. Yeah, so it is crazy. We're all working from home today because the roads are closed. So if you do hear a dog bark in the background, I'm a dog dad. I have puppies, so we are working from home today. So let me tell you a little bit about why I got into the investment advisory business. My parents were both very successful professionals. In their lane, they were extremely successful. However, when it came to retirement and investment, they were extremely unsuccessful. And to the point that I grew up on large cattle ranches, and that was what they wanted to do retiring. And when they passed away, they had lost everything due to poor investments, and they ended up living with me in their final years. And so I tell clients all the time, if you're too busy to get your financial house in order, then pick which kid you want to live with. Now, I apparently won because I have a sister, but my parents lived with me. But yeah, this is that serious. I watched my sister follow their investment strategy, and when she retired, she had a IRA in the 401k in the neighborhood of $800,000, and she, through the advice of her advisor, decided to invest all of it in the stocks of one bank. This was 2007. So you can all remember what happened in 2008. She invested 100% of her 401k. It rose up well over $1 million. And in C First Bank in 2008, that bank ceased to exist and she lost every penny. So from an ophthalmologist to a Social Security recipient who had to file early is where she went due to poor financial advice. And that just drives me every day in my passion to keep people from getting into that scenario. There's very few blanket solutions for clients. One piece of blanket advice that we give out to everyone is make sure you're working with a fiduciary. When you pick your retirement advisor, your investment advisor, your financial advisor, make sure they are a fiduciary. A lot of people will claim this. Ask them what license they have. There's only one fiduciary license out there for our world, and it's the Series 65. If you're working with an advisor that has another license, well, they are able to work on both assets under management fees and commissions. That's a problem. That is a way for financial advisors to double charge you. And if you wonder why there is only 500 of us worldwide doing it this way, it's because you can make much more money getting a Series 7 and getting paid to guess what's going to happen in the market and play with other people's money. That's not a fiduciary. The fiduciary is bound by law, and we will lose our license and we face criminal penalties if we don't do what's best for the client. Now, the hardest thing to find in this industry is a advisor that is willing to work for less money than the rest of the financial world and has a heart that actually cares about people. Now, I've somehow, by divine intervention, got in an advanced class with Dolores, and I found this wonderful lady who had a heart of gold, and I knew immediately we were going to be partnering with her at some point, and we have moved forward with that. If you have hired Dolores, congratulations. She is my personal accountant. She is our business accountant. She is amazing. So I'm going to get into a little bit of what we do and how we do it. And I'd like you to think, first of all, about your current financial advisor. Are they offering training? We have over 100 hours of training available to our clients through live events, through virtual events, through meetings. We have quarterly meetings where we gather up our clients. We sit down with everybody. We have dinner. We talk about what is going on in the financial world, what's going on with them. We have absolute minimum, and I agree with Jeanette 100%, an absolute minimum is a yearly meeting. I just can't allow people not to take a deep look into what their investments are doing, how things have changed in their lives without meeting at least once a year. And that is, I far recommend more often. And I want you to ask yourself a question when you're thinking about your financial advisor. Do you have their personal cell phone? Because my clients do. We need to talk about what's going on in life, and sometimes it's time critical. As Jeanette talked about earlier, someone might have passed away. The last thing you want to do is wait a week or 10 days to meet with your financial advisors to figure out how to get through this. They need to be available to you, and they need to be able to put the time and resources into educating you so you can make the right decision for your financial future. Now, I'm going to share real quick a short presentation that kind of talks about what we do and why we do it. Let's see here. I'm hoping, because this is not showing me a preview.
I'm not seeing.
Is that sharing now?
No.
Okay. How about
Right.
now? I apologize. Some of us didn't grow up in this world of
Oops.
everybody doing things through technology.
Can you see the green button at the bottom?
Yeah, it's not letting me share.
Oh.
So I'm taking a look here to see why. So bear with me.
No problem.
We may have to do this the old-fashioned way and just talk about it, which is just fine with me. I think that's what we're going to do. So you guys don't have to sit there and stare blankly at me while I mess with the technology. So we are an investment management company, and I believe you should work with the only fiduciaries. We are very centered on developing the American dream. We firmly believe that the American dream is for everyone, regardless of race, religion, political affiliation, or anything else. We all know that the United States has not applied the freedoms equally, and that's a historical fact we can't get past. But what we can do is model our business and model our beliefs that includes everyone. The American dream is attainable through a screen. When I talk about a screen, I'm like, how do you look at life? Can I actually attain my American dream? I firmly believe the answer is yes. My parents came from very diverse backgrounds, and in the beginning, very, very successfully attained their American dream. But there's a problem that comes up, and it's the problem of one mistake. My sister made that one mistake. She invested solely in one company instead of being globally diversified. She had no idea that there was actually a science to investing. It's won the Nobel Prize. Our system has actually won several Nobel Prizes. Those of you that have heard of Harry Markowitz, he's the father of modern investing. He wrote a theory in 1952 to talk about how to invest prudently and efficiently. It took until 1990 for the computers to get strong enough and fast enough to be able to prove his theory right. Then he immediately won the Nobel Prize. Well, once the computers caught up, Harry was right. And he was on our academic board up until his death last year at the age of 95. So if you don't think having a Nobel laureate on your academic board doesn't hold your feet to the fire to follow the science, then I don't know what does. For you that remember the Reagan years, Reagan's economic advisor, Art Laffer, who has been the economic advisor up to and including the current president, he is a frequent speaker and a member of our board. So there is a science to investing. Most people don't even realize that. And when you get into the investing world, what I have found with professionals, especially high-end professionals such as yourselves, that you're too darn busy making a living to invest the time in yourself to make sure your family and your legacy lives on the way you want it to. I mean, goodness sakes, you went to years and years of college and then you got in and busted your butts just trying to make a living and pay off those college debts and take the next step. And before you know it, you turn around and you're in your 50s and 60s and you haven't really prepared. And if you have opened investment accounts and you look at it and you think, well, they're doing pretty well. Most people look at an account and if it's going up, well, it's doing pretty well. Well, compared to what? Do you have a scientific basis on what you should be expecting for returns? Have you looked at those? Have you had your advisor review those every year? Have you had anyone get in deep with what you need out of life, what you want out of retirement? Are you a single person who wants to go out with their last check bouncing? Or do you have kids and grandkids that you'd like to pass on generational wealth? That should be something that your financial advisor asks you. That should be something that's first and foremost in their mind is what do you want out of life? I can build the best portfolio that has ever existed, and it does no good if it doesn't meet your needs and your sleep factor. Are you the type of person that watches the financial news and loses sleep every time the market dips? Or have you gone through a bunch of training and you understand that dip is a buying opportunity because everything's on sale? These are things that people in my industry don't spend enough time on, is the needs of the individual client. The individual client is your reason for existing. So in my opinion, you guys should be the most important thing in any plan. Bring your spouses anytime you have a financial meeting. You should bring your spouse. Why? Well, Jeanette just talked about it. What if something happens to you? My grandmother used to say, what if you get run over by a chicken truck? Never actually seen a chicken truck. Don't know where that comes from. But what happens if you pass away unexpectedly? Is your spouse educated enough to truly understand what's going on and be able to take care of herself or his self, the children, the grandchildren? Is the house safe? Those are all things you need to look at. And you need a financial advisor that understands that. Do you have a financial plan that is actually built out, calculating inflation, calculating Social Security, pensions? Some of us, myself included, are extremely lucky in that we have a pension. This is actually my second career. I worked for the state of Colorado for 22 years and I have a pension. So if you're not in that lucky boat, what are you going to do? Are you going to live off of your investments and Social Security? Are you going to build a personal pension? There's several options out there and they're unique to everyone. But please, when you choose your team to work with you financially, make sure it's someone that's available, that you're not going through a call center to find the next available advisor that has no idea who you are, that has no idea of any concerns you might have. Work with somebody that's actually in touch with you. It's a rare thing in the financial world. Like I said, there's only 500 of us out here doing it the way we do it. We have a new best-selling book out. Mark Matson, our partner in investing, has just written a new book called Experiencing the American Dream. And it's a 6-time national bestseller. And it talks about the American dream being for everyone and the American dream being attainable in some form for everyone. That's something that I drive home to people is it's never too late to start building towards your American dream. How that looks is dependent on a lot of factors. It's very personal, but you can attain almost anything in this wonderful country of ours. And we preach that regularly is don't let the world beat you down. Don't let the political system beat you down. This American dream is yours and it can't be taken away. You can give it up, but it cannot be taken away. And we model ourselves on that basis. Everyone has a chance to attain some version of their dreams, and we are here to help you. And you can talk to us about anything in the financial world. We talk about succession training. How many people are really set up and know what they want to do when they work in when they end their working career? We call it the work optional lifestyle. A lawyer in our firm is 75 and he keeps telling me more years. And he will do it, I know, until he can no longer do it. We have a succession plan built for him. Have you built your succession plan? Have you gotten the accounting side? Have you worked with Dolores and gotten the accounting side of a succession plan set up? Do you have any idea where to start? That is all something that your financial advisor should be able to guide you through. Succession is heartbreaking when the spouse comes to us and there's been no plan. Where do I start? What do I do? I don't know anything about the business. That is something that is very, very near and dear to my heart because I've seen it too many times with new clients coming in that had no plan. So please get that in order. Get with Dolores. Get that succession plan started from a book's perspective and then from a personal perspective. Who's going to take over your business when you retire? Who is going to, are you going to have junior partners or are you going to sell it, turn it into a liquidity event? If you do that, how are the taxes going to affect you? Have you done this in the most tax efficient manner? That's all training that you need to go through for your families and for yourself, for your own peace of mind. I have really, really enjoyed today just coming to speak with you. And if you have any questions, Dolores can put us in touch or answer the questions herself. So there's a big opportunity here for you to get your financial house in order. Please take advantage of it. Don't come in 3 days after you retire and ask your financial advisor, what do I do? Let's make a plan that will work, that we know will work, that's been tested and scientifically proven, most importantly of all. Thank you, Dolores. I really appreciate you inviting me here today.
Thank you so much, Caleb. Thank you for your time. And thank you to all of our incredible speakers for sharing such valuable insights today. We covered a lot of ground, from strategic tax planning and smart investment choices on the critical roles that organized finances play to building a strong financial foundation. As you reflect on everything that we've discussed, consider this: each strategy is a piece of a larger puzzle. When these pieces come together, they create a roadmap for financial security and growth, one that's uniquely tailored to your needs as a legal professional. That's the essence of what we're trying to achieve: a holistic approach to financial well-being that doesn't just set you up for the next tax season or quarter, but for years to come. Now, to truly take this journey further, I want to introduce you to the Financial 360. This program was designed specifically with attorneys like you in mind. Financial 360 is a comprehensive service that covers all the bases: tax optimization, investment growth, financial organization, and much more. Think of it as your all-in-one financial solution crafted to help you reach your unique goals and expert guidance every step of the way. And you can elevate your financial game with the Financial 360. This premier program designed exclusively for attorneys. Today we're giving it away for $1,000, and it's a $2,000 value. You just put your email in the comments below, and we will get our appointment book out to you. And for being on the call today, you get a complimentary growth strategy session to identify immediate steps toward building wealth. Don't miss this opportunity to secure your financial future with a plan crafted for your unique needs. Thank you again for joining us today. I hope you leave with inspiration and practical tools to start making meaningful steps towards your financial security and freedom. Here's to building a future where your finances are as strong and strategic as the legal skills you bring to your clients every day. Again, I'm Dolores Sheets with Dolores Sheets Accounting and Tax, and I look forward to working with you. And have a great day.